from day one, we said we're going to bring 100 million new users into crypto. And you're not going to do that by churning more and more features on DeFi, right? These people are not comfortable with buying a Bitcoin. Forget about doing DeFi transactions, putting in a smart contract and getting DAI and rehypothecating it or doing whatever, right? So we are saying, look, let's make it as simple as possible for these people to put one toe in the water. How about stable coins with zero directional risk that are earning 8% or 9% interest? So the bank pays you 1%, you take the same dollar, you put it in this bucket, and it pays you 8%. How about we start with that instead of trying to convince people to buy Bitcoin? So if you look at what Celsius does, it's targeting the people that don't know anything, don't know how to manage keys, don't know, right? We're trying to solve that problem.
Layer 1 is a podcast and community dedicated to helping you master all things crypto. We'll be bringing you the best interviews with project executives, technical analysis for trading of the most popular cryptocurrencies, and insight into what's actually happening behind the scenes.
As you join us each episode, you're going to hear about tokens, fundraisers, investments, and even crypto conspiracies. But please remember that nothing we say should be considered financial or legal advice.
Come join us on this journey, and welcome to Layer 1. All right, guys, welcome to another episode of Layer 1. We landed ourselves a big fish today. We have Celsius on the podcast, and we're going to get to Alex here in a second, but I do want to hit Dimitri. Dimitri, how are you doing this week?
Oh, I'm doing well. I'm super excited about this guest. I've been a big fan of Celsius. This man basically revolutionized the telecom industry and did so many things in his life. He's a huge entrepreneur, leader, and he's killing it in crypto. So I'm super excited to have him. We have definitely some hot topic questions that I want to get into. So yeah, Alex, how you doing?
Great. Thanks, guys, for having me. And turbulent times. I think it's a great opportunity to, I think, share some of our thoughts and ideas with the community, and obviously with the coronavirus and other things, I think people have to be careful as well. So talk about financial planning or health issues and things like that. So happy to cover all that stuff. It just happens that 2006, I was buying a company that was making an H1N1 vaccine or treatment process. So I'm very kind of in the weeds about everything that's to do with coronavirus or the flu virus and things like that. All of those families of viruses. So happy to kind of put that a little bit in context as well. Not that I'm a world expert, but at least I have some context.
Yeah, coronavirus obviously been a huge topic amongst our group. So we're happy to, talk about that. We're happy to talk about all your previous companies that you founded. You've done a great job as an entrepreneur, obviously, and we'll touch on that. We were talking pre-episode how you were going to be a great guest for this channel. So we're happy to have this episode, man. We're super excited. So usually we start by talking about your background before crypto, in your run up to maybe finding Bitcoin, finding Ethereum, and we can start there. So let's talk about Alex Mashinsky as he came into tech.
Yeah. So look, I am a unique case. I was born in communism in Russia, what used to be the USSR, in the Ukraine, and immigrated to Israel. So I grew up in socialism and spent the last 30 years in capitalism. So I'm one of the very few people who actually lived in all three systems and kind of tried to make a living, which is so I think, and I see Bitcoin or crypto in general as the fourth system, right? Because it's it's a completely new revolution, it's leading the decentralization wave. So it's, in my world, it's not just a tech innovation or it's a little chapter in capitalism, right? This is a completely different way of doing things. And I think I'm in the minority thinking that way. I think most people view the blockchain as just another technological innovation. They view crypto as this weird thing that just the crazy people like you and Dimitri and me are excited about. Everybody else is Look, my career, I did 8 startups. And so before Celsius, I ran a public company, Novotel Wireless, that had 1,500 employees and 400 million in revenues. And I was paid millions of dollars as CEO of a public company. And I left all of that to jump into crypto, and people thought I was crazy, right? They were like, "What? Why would you do that?" Even my wife was like, I don't understand. You get paid millions of dollars and you're going to leave all of that and pay yourself
What
nothing.
year was that?
That was 2015 or 16. Yeah. So, and I realized, look, after Mt. Gox, I realized that this industry is here. Is here to stay, right? And because, you know, I read Satoshi's paper in 2010. One of my employees kind of put it on my desk and said, "Look, Alex, this is the future." And I was like, "No, it's not. This is crazy. You know, it will never happen." And after seeing Mt. Gox and seeing the community just brush it off, you know, like just keep walking like nothing happened, I realized that this is much bigger than just a speculative play or technology play and so on. But before Novotel Wireless, in 2003, I started a company called GroundLink, still around. And GroundLink, I ran around. Again, I was a techie, right? And I ran around and told people, look, the future, you'll be able to take your phone and press a button and order a car anywhere in the world instantly. And people are like, why are you excited about that? And I was like, no, you don't understand. It's going to change everything. So we built GroundLink. We were in 5,000 cities and airports when Uber was just in San Francisco.
Oh, wow.
And they copied everything we did. We didn't own a single car. We had real-time dispatch. Even today, when you use a GroundLink app, there's still things that Uber does not have 10 years later, right? But it didn't matter because Uber had $14 billion to burn, subsidizing rides for their customers, and GroundLink did not. So being the innovator, being the trailblazer is not, doesn't mean you don't want to be the first one. You want to be the last one, you know? And it's the same is true with voice over IP. When I created voice over IP in 1994, I wrote the patents, I built the first few gateways. And, you know, the most successful company in voice over IP was the last company, right? WhatsApp, with 1.5 billion customers. So in crypto, we still don't know, like these are really early days. We don't know who is the last company. We know who the first company is. We know who some of the contenders are, but we're searching for that killer app and the business model. And so look, I was extremely lucky. I was at the right place at the right time. And I managed to use my unique skills to create these companies and bring in amazing people who helped me build these things. And I raised over $1 billion from probably over 100 VCs for all the different companies. And Celsius is the first company that we did not take any money from any VC, from any outside investor. Everything is from the community. We built it for the community. The community funded it. We are giving 80% of what we make back to the community. Sorry, incoming.
No worries.
So, and because of that, I think that is the purpose of decentralization. So you either believe in it or not. If you're in it just for making a profit, or you're in it just as a toll collector, and all you're doing is building a version of Goldman Sachs or Bank of America in the crypto world, then we didn't do anything.
Yeah, absolutely. Yeah, I remember back in the day, you know, we worked together back at ICO Alert, where you guys were building out the community. The community was obviously very strong. It's still strong to this point. It's growing and even further. I really like, you know, your points when you were discussing like the VoIP and then the MoIP, right, which is the future of money. And I want to know, like, what do you see right now? How is MoIP advancing since the last time, you know, we talked about it? Or you talked about it, you know, do you see we made some significant progress, or what are some of the challenges right now that, you know, MoIP is basically dealing with at the moment?
Yeah, so MoIP is money over IP. I think I coined the term like a year or two ago. And you see, look, voice over IP was easy because no matter who you met and you said you're using AT&T or you're using Ross Telecom or Deutsche Telekom or KDD in Japan, it didn't matter. When you showed them an app or a device that allowed them to talk almost for free or charge whatever, 10, 20 cents a minute instead of $2 a minute, they immediately tried it and they switched it. So the adoption, like in 95, I think there were like 200-300 million people using VoIP, right? I mean, it was instant. So the barrier was very low. When you're asking people to trust you with their money, it's a different thing, because when the app doesn't work or when the service doesn't work, great, I'm just going to go back to AT&T. But when when your money disappears, there's nowhere to go back to, right? So the problem we're having in the community is that there's too many scammers. There's too many ways to lose your keys. The service is very complex. Again, in 94, you had to actually type the TCP/IP address to create a socket connection with the other side, which is where we are today. You have to send an address and you have to do a test and you have to see if it's working. So for me, people think I'm so smart. I'm not so smart. I just seen this movie before, right? I know how it ends. So I just skip a few. I go straight to like the finish scene, like where. But really, if you look at where we are today, after 11 years of since the Bitcoin was created, we're still in very, very early days, because we're doing what VoIP did on its first year. And in year 2 and year 3, you could mask the address and just I could put Q's name and just say Q and immediately connect with them, right? So we haven't even gotten there yet with crypto, right? So I cannot just send you coins by clicking on your name or your in my contacts, because it's too easy to fake that or to spoof that or to mask it, and all the scammers are slowing us down. So today what you have is, the way I see it, is that there's basically 3 tracks, right? 3 horses trying to compete for the future of decentralization or the future of the blockchain, I would say. And really, 2 of them are not acting in our best interest, right? So the first one is the corporate versions, right? Libra, JP Morgan has their own blockchain. So all the big corporates, which again reminds me of what IBM did back in the late 80s and early 90s. They created their own cloud, basically their own intranet, and they went to all the biggest companies and said to them, hey, buy it from us. It's a safe version. Don't use that public thing. I mean, it's so unsafe and it's so not good for you, right? So we kind of seeing the same movie again with that. Then you have governments. So governments now, like China, like the United States, like obviously other countries are coming up and saying, we're going to create money on the blockchain. We're going to digitize money, and don't trust anybody else, use us, right? And obviously we know that that has, when governments create money, that has nothing to do with acting in your best interest, right? I mean, they're not trying to control the printing of money. They're just going to put it on the blockchain so they can track everything and they can tax everything. So that's definitely not acting in your best interest. And the third version is like the open internet, right? It's public, it's transparent, it's based on global standards, it's using open ledger and consensus, and we know how that works. Yes, we're transitioning from proof of work to proof of stake and things like that, but we know that is the model that wins, and I'm a huge supporter of that. So everything I'm doing is on that track, right? I'm against anything that has to do with Libra or government centralized solution. So the question is are we as a community going to come up with a killer app and a killer use case on that intranet public version? Or are we going to let the other 2 guys steal it away from us? Because if they steal it from us, all it's going to do is going to delay decentralization by another 10, 20, 50 years.
Yeah. Going along with that point, we've seen kind of the rise of DeFi and decentralized finance and CeFi as well. So like anything, it's not a perfect concept. It's not perfect in practice. So what have you seen out of like the rise of DeFi and the DeFi hacks that we've seen, and the problems with proof of stake that kind of propped up as Justin Sun and the Steemit situation kind of worked out? What do you see as kind of the rise of DeFi's happened over the past year, as well as the problems we've seen with proof of stake?
So first, I'm a huge supporter. I think experimenting and trying new things, new ways is definitely important. So I'm not, I don't think anything that was tried to date has been negative or bad for the community, or in any way kind of not kind of taking the movement away from where it needs to go, right? So I want to make clear that, because people would see me tweet about this stuff and they go like, "Oh, Alex hates DeFi." No, what I hate about DeFi is the fact that some of the players are ignoring the most obvious things that are just going to slow us down further. So the worst thing that can happen to us, to all of us, is if, for example, the United States government comes out tomorrow and says, "Oh, you guys don't use any KYC ML? Guess what? I'm shutting all of you down," right? So this ignorance of pretending like, well, hey, we're in DeFi, we don't need to follow the rules. We don't care what FinCEN says, what the SEC says, or what anyone else says. We're just going to do whatever we want. It worked for Uber, it worked for Airbnb. How bad can it be for us? So that attitude endangers the entire community, because when something like this gets shut down, or I'm talking about the regulatory side, right, not the tech side. It slows down everybody. Everybody gets scared about everything, right? So I just think that, even though I understand from a technical standpoint that DeFi may not need KYC, because you're putting the assets into a smart contract and you're getting the same coins back. So in theory, you don't need to do KYC because you're getting the same coins back. But the reality is that, again, the con men and the bad actors can game that system and use it in very, very nefarious ways that none of these DeFi companies even understand. I used to be a black hat. I used to hack into the phone companies and do damage. So when I put my black hat on, there's 100 things I can do with DeFi right now that's just going to blow up the whole system. And we're starting to see that a little bit in some of these, like what you've seen, the hack or people taking advantage. That wasn't even a hack, right? They didn't break the code. They took advantage of the fact that the code was not written properly to squeeze $1 million out of the rest of the community. So if between the hacks and between the regulatory side, we are basically swimming naked, and we think that the tide will never recede, and we're not going to get caught. So all I'm saying is that DeFi needs to worry more about scale. It needs to worry more about security. It needs to worry more about regulatory side. And it's funded. It's very well funded. It's doing a lot of good things, but we are taking way too much risk right now.
Yeah, absolutely. We had the podcast with Synthetics. We had Kane, who's the founder, on it, and he definitely talked about the struggles that they had with these players that come in and they exploit certain issues with delays and oracles and so on. And he was saying that it's kind of a struggle for DeFi because you build things out and then you think it's perfect, but then you find out certain issues come up and then you evolve constantly, from there on, to build out and, fix certain issues. So it's kind of like, make it and see what happens. And then if there's issues to evolve into something better. But yeah, I absolutely agree with the KYC, that's, for regulators, you absolutely, definitely need that. In regards to just, regulations, so there was a news that came out from Germany that there was about, 40 banks, I believe, that were trying to get a green light from regulators to have custody of crypto. So, with your background and kind of opinion of the governments and banks, what do you think this is going to be like? Is this a good thing for crypto? Is it bad? If we have German banks, that we generally know German banks are not really doing that good, right? So
sure. So yeah, no, it's a great question. So first, we have partnered with several of these companies that are regulated and have the BaFin license in Germany and so on. We will be issuing announcements in the next few weeks. All these people basically who have the banking side said, okay, we want to do crypto. We're not going to do it ourselves. Oh, great. Here's Celsius. They already do interest income. They already do loans. Okay, we're just going to slap them next to the regular bank account and offer both to our customers. And Celsius, unlike DeFi, who thinks we're just going to blow up the world, has one leg in the centralized world and one leg in the decentralized world, and is trying to build bridges so we can go back and forth with the existing system. Decentralization can still win while the existing system still breathes, right? And that's what we did in VoIP. In VoIP, we didn't create a new world in which you only could talk app to app like we're doing right now. We created a world where you could call anybody with an old phone, even a rotary phone. You could talk to them and they could talk to you. So that I'm a believer that we're going to have this transitional system, and then we're going to have enough users to become fully independent and have enough users to basically operate on our own. Today, DeFi does not have enough users. All the DeFi users are crypto community users who got in and jumped in, and there's just not enough of them. So if you look at the mission of Celsius, from day one, we said we're going to bring 100 million new users into crypto. And you're not going to do that by churning more and more features on DeFi, right? These people are not comfortable with buying a Bitcoin. Forget about doing DeFi transactions, putting in a smart contract and getting DAI and rehypothecating it or doing whatever, right? So we are saying, look, let's make it as simple as possible for these people to put one toe in the water. How about stable coins with zero directional risk that are earning 8% or 9% interest? So the bank pays you 1%, you take the same dollar, you put it in this bucket, and it pays you 8%. How about we start with that instead of trying to convince people to buy Bitcoin? So if you look at what Celsius does, it's targeting the people that don't know anything, don't know how to manage keys, don't know, right? We're trying to solve that problem. We're not trying to solve the problem of how you move money even faster on Ethereum or on some other chain. So I think, look, these are great questions and these are great challenges, and we need all these things. I'm not saying in any way just Celsius. We don't need DeFi, right? That's not what I'm saying. I'm just saying that if you want to go to 1 billion users, it's not going to happen with just DeFi. And if you're not building the bridges with the existing community, with the existing world, you're going to you're going to keep living in a little island where you know everybody. You go to every conference and you know everyone. If you're happy with that, great. I'm not so happy with that, I want some diversity.
Yeah, I like all the examples you're kind of tying in from the first tech bubble, right? I think that crypto especially has this demographic of like pre-30 or maybe even pre-40, and we necessarily weren't all around, at least in any form or fashion, for that tech bubble. So I appreciate the experience you have and all the kind of relationships that or kind of the correlations you're making between the two eras.
Yeah, so it's one thing to talk about the 90s and give examples. I built 2 unicorns,
exactly.
2 companies worth over $1 billion. I've had $3 billion in exits. You would think people would take that a little bit more seriously when I say, hey, we need a little bit of this and we need a little bit of that. But the haters will hate, and I wish I could sing that song, but I can't.
Yeah, no, go ahead. No, I'm just kidding. But so I was listening to a podcast that you did with Masari recently, and based on your point there, you were saying that interest-bearing accounts were kind of the gateway. You saw that as the gateway to all these billions of people. So I think you touched on that there. But let's go into Celsius now, because I feel like we can spend a whole episode on just your past exploits and everything that you've done. And I wanted ask you so many questions, but we need to touch on Celsius for people who haven't, been into the app and know anything about it. So let's talk about the ICO that you guys had, or I guess the idea first, how it came to be, the ICO, and then what you guys are doing today.
So again, I started with nothing, right? I came to the United States. I had less than $100 in my pocket with a plastic bag. I came here. I was planning to stay here just for a week or two and go back to where I came from, right? And 30 years later, I'm doing well, and I had these great, amazing opportunities, and I created a lot of value, and listed 2 companies and so on. And but I didn't forget where I came from. And when I read that half of Americans don't have $500 in case of emergency, I know what that feels like. I know how it is to miss your rent and not be able to pay your credit cards and worrying about having kids at all. Forget about putting kids through college, right? So I think when we see this disparity between the rich and the poor, and it's just getting worse and worse and worse, and no one is doing anything about it, and I decided that I'm not just going to talk about it. I'm not just going to have an opinion. I'm going to find a solution that can scale and will outlast me. Meaning, when I'm dead, there's going to be hopefully several 100 million people using this service, and it will always act in their best interest. And that is really what we're missing. When you wake up in the morning, unless you go to work, and I know the two of you barely work, but I'm talking about the average, the normal people, I'm just kidding. I'm just busting your chops, I wish I got to sit and interview interesting people all day long. I think it's a great job. But my point is that most of the people in the world have to wake up and do labor, either mental labor or physical labor, to convert their time into money, right? And through that effort, they can pay their bills, or at least some of their bills and everything else. Meaning their money doesn't make any money. It's their time that makes money. And when we say, hey, look at this rich guy, he has a lot of money. No, rich people don't have a lot of money. They have a lot of assets, because their assets make money. Actually, if you have a lot of money, you're stupid, because the dollar is a horrible store of value. It's a great form of payment, but it's a horrible store of value. So you want to put the dollars to work as quickly as possible. Otherwise, they'll lose their value every second. But they don't teach you that in high school. They don't teach you that in college, right? It's not like there's some book on, how to make money, how to create value, how to become rich and stay rich, right? Try to find a book about that. So most of us, if everybody knew how to do it, then nobody would be rich, right? Because we would all be able to steal each other's best ideas and do the same thing. So I said, wait a second, what if we take the best ideas from Wall Street, from the billionaires, from all these people that know how to create value, and created a system that acts in the best interest of the community, and allowed the entire community not to do it, but just to deposit and trust us that we will always execute in their best interest. And so when we created Celsius Network, we created basically this, it's like a Costco, right? It's like a warehouse full of great ideas, great products that yield stuff. And you have to come in with your cart. You pay a membership fee. Right now, the membership fee, I think, is 15 cents to join Celsius. It's one CEL token. And you can come in with a giant cart, and you like orange juice, great. You need some toilet paper, great. You don't need to check prices. You know that every item in the store has been curated in your best interest and is there to act in your best interest and yield for you as much as possible. So it's safe, secure, and it's yielding. So you're not going to find any assets inside the Celsius app that are not yielding. Now, you do have to decide, do I want a stable coin with very low risk? Or do I want to take more risk and maybe buy a Bitcoin or Ethereum or EOS or Dash or anything like that, right? So what Celsius has created has never existed before, right? No one, you tell me, can you walk into a bank and feel like anybody there is acting in your best interest? Like anyone in the bank is trying to help you?
No, not at all.
Right? I mean, so let's think about what banks do, right? So banks exist to basically take your money, take your deposits, and then they pay almost nothing for it, right? So most of us earn nothing because we're too lazy to move the money from the checking account to the savings account. And even if you moved it, you go from 0 to 1% per year, not per month, per year. So why would I even bother? I have $1,000 or whatever I have in my bank account. I don't even bother moving it over. But because so many people don't bother, a bank like JP Morgan has something like $7 trillion worth of deposit that they pay zero interest on, zero, right? And that's most Americans, right? So then JP Morgan turns around. So, it will take Dimitri's, paycheck, turn around and lend it to Q. The two of you may be sitting in a coffee shop and Q is using his credit card. And guess what? They just gave him your money, right? Dimitrios didn't get anything for it, and you're paying 24% on your credit card. So
wow.
how is that fair? Now, it's not the bank's money. Most people think when I use the credit card, I borrow from the bank. No, you're borrowing from your neighbors. You're borrowing from your family. You're borrowing from the future, because the bank takes money from the government, which prints money by stealing it from our children and grandchildren.
Yeah, it's absolutely crazy. You know, just to think about what the interest rates are right now for regular people at the banks, and how the inflation doesn't even offset, you know, that at all. Especially where we are in the economy right now, with the Fed cutting more rates. You know, global economy is stimulating because of the issues that are going on. I gotta ask you, how did you come up with the name Celsius? Just really quick, you know.
Sure. So look, I wish I had a great story for you, but me and Daniel Leon, who's my co-founder, we were sitting in the office. This was like the first week or second week, and we had these two interns from NYU that were sitting there, and me and him were like throwing ideas at each other. What are we gonna call it? And the two interns are just like nodding their heads, like these old guys. They're like so clueless. They don't understand anything. And after like an hour, I was like, okay, you know, enough is enough, guys. Stop nodding your head. If you have a better idea, tell us what your better idea is. And one guy was like, Celsius. I'm like, what? He's like, Celsius. I'm like, sold, done. So there was no magic to it. It was just young kids who kind of put us in our place, as usual, you know, as usual. But back to the bank analogy, right? So because look, 2008, when 2008 happened, there were hundreds and hundreds of banks. Many of them don't exist anymore because the government basically collapsed all the small banks into the big banks. And now we have 4 banks in the United States that are too big to fail. They basically can do whatever they want. They can decide tomorrow not to pay anybody anything. And there's nothing the government or the Fed or anyone else can do about it because they're so dominant, right? So just like with voice over IP, right? When AT&T or KDD were the dominant operators. That 90% of the profit came from these international voice calls. They charge us $3 a minute. It cost them less than 10 cents a minute to run those services. So for me, it's not like I see it and I'm like, hey, isn't everybody else understanding what's happening here? This is daytime robbery. And no one is giving these banks a monopoly, just like no one gave AT&T a monopoly, right? It just happens that they centralized everything and they charged us too much for too long. So we decided to find a way to deliver the benefits to our community without becoming a bank. And we actually found that it's possible. There's nothing, the opposite, the government, and in many states, the states have laws that are protecting companies that are charging low interest rates. So for example, we said, okay, we're gonna pay interest. No one has paid interest on digital assets before Celsius, right? So people thought that was impossible. People were like, what? You're going to pay Bitcoin on Bitcoin? How are you going to do that? I'm like, just like Wall Street pays money on money. We're just going to do the same thing, you know? So we invented that category. And now obviously we have a lot of copycats, but we created that because, we wanted to take the best ways that Wall Street makes money for the very, very rich, people like me, and deliver it to everybody out there, right? And the second piece was, how about lending dollars? Like, why are we lending? Like, before Celsius existed, BlockFi and Salt were charging 18 to 24% per year to borrow dollars against your Bitcoin. And we came in and we said, why 24%? We can do it for 5%. So the reason they hate us is because first, we invented a whole new business that they didn't have. And second, we ruined the business they did have, right? We just completely decimated that business. I mean, Celsius we just reported our 2019 numbers, $5.47 billion in loans. That's more than all the other guys, all of our competitors, plus all the DeFi guys put together.
Now they were doing 18 to 24% because that's just kind of the legacy systems that everyone's used to. So they just thought they could get away with it in crypto. Yeah,
they said, hey, there's no one lending, so let's charge as much as we can. And in most states, you cannot go above $24.99 or $29.99. That's why your credit cards have those rates. It's because the banks, somebody actually stopped the bank, said, hey, you cannot go higher than that. If those laws did not exist, I'm sure the banks would charge you 99% per year or 299% per year, like the day loan guys, right? So So Celsius came and said, look, we are acting in the best interest of the community. What is the minimum we can charge? Not what's the maximum we can charge. And in most states in the United States, when you come and you say, this is what I'm going to do, they go, how? You're acting in the best interest of the community? Go ahead. You don't need a license. You don't need a license. So that is the piece that most people don't understand, is that there are just as many laws out there to protect the community as there are to protect the banks. And all we did is pulled all those together and delivered a service that looks like magic. For most people, when they look at the Celsius app, they think this is either a fraud or a scam. It cannot be. How come it's only one company that can do that, right? But
Right.
now there's 10 people doing it. So why didn't they do it before? So it's great that we have competition. I love it, because now finally we can bring the next 100 million people into crypto, and we're all going to benefit.
Yeah, absolutely. No, that sounds fantastic. In regards to like the stable coins and interest rates that you guys offer, I believe right now you offer 8 stable coins, right? And
11.
11. Oh,
About
wow.
to be 12. Yes.
Nice. So yeah, my question is, I don't think I saw Euro on there as one of the stable coins, or is that going to be added as well? What are some
It's
other
coming.
things?
It's coming. There were a lot of dollar-based great companies like Circle and TUSD and Paxos and Gemini, right? These are all trust companies. So it was very easy to just go and say, hey, let's take Paxos for example, right? Paxos, you give them your money, they take the dollars, put them in an FDIC insured account, and give you a token that when you give it to us, we pay you 8% interest. So your money, your dollars are in an FDIC insured account, exactly the same thing you would get if you gave it to your bank and they only paid you 1%. You understand? So again, most people don't know how the pipes work and how everything works and so on. And they're like, oh, it can't be safe. I mean, Alex probably has 5 Lamborghini and he's flying private. Hey, I use a subway every day, okay? With Corona or without Corona. No lime attached. I use a subway every day. So in New York, so my point is that we bothered to go and dig and use law firms and answer all the questions and solve the puzzle, right?
Mm-hmm.
And solve the puzzle for the 7 billion people on this planet who cannot afford to finish the month, who cannot. I get emails every day from people from Portugal and people from Japan and people from barely broken English saying to me, Alex, I'm using Celsius, only a few $100s, but I see the light at the end of the tunnel. I can see now how I can have kids. I can see how I can afford a family. I can see how I can put my kids through college, right? And that is the most important thing. It's not about making you rich. That's not what we're trying to do. We're trying to deliver what used to be a norm in the United States of America or anywhere else, where you knew that you could finish the month. You knew that you didn't have to get a second job just because you wanted to stay alive. So, and all of that is being taken away. Why? Because the richest people in the world want to suck even more out of the people at the bottom of the pyramid. And we are here to replace that pyramid with a circle, right? With decentralization, with crypto as the technology that is carrying the flag for decentralization for all these 7 billion people. And they get it in a second. The reason Celsius is popular is not because I talk so much, okay? It's because when people look at it, they try it out, they download the app, they put $10, $20, they go, wow, it actually does what it's supposed to do. Okay, let me take a loan, see if they have any origination fee or termination fee or early withdrawal fees or closing fees.
Fine print.
Right.
Print.
How about, let me get into a margin call. Let's see if they whack me when I get a margin call. And they see we have not charged a single customer a single fee since we were created. 77,000 people use Celsius. Not a single customer can tell you, I got charged the fee by Celsius. So, and that, try to go to your bank and tell them, hey, is it possible for you not to charge me any fee? I know you're advertising no fees, but when I look at my account, there's a fee behind everything I do. Somehow, you always manage to charge me a fee for anything I want. So we get used to that world as if that is the norm. And unfortunately, too many of the crypto companies that exist today and I call them out, right? I call them out every time I do a podcast like this, are exactly copies of the banks. There are toll collectors who are just charging fee, and they, like Coinbase, proudly saying that since 2014 they made $2 billion in fees from our community. So what do they do with these fees? Do they buy Bitcoin with it, or do they distribute it as interest income? Do they give it to the community? No, they give it to their rich shareholders, just like JP Morgan, just like Bank of America. What Celsius does is, when let's say you took a loan with us and you pay me interest in dollars, right? You took $1,000, you paid me $100 interest or whatever. I go to market, buy Bitcoin with it, and I deliver 80% of that Bitcoin to my community. So my 77,000 people get pro rata out of your $100. All the dollars stay inside the community. They never leave the community. We do the opposite of what most of the guys in crypto do. And that's how you win. You win by creating a larger flywheel inside the crypto community, not by sucking dollars out of the community.
So that's how that economic model works. You when someone takes a loan, you use some of that interest to then go buy Bitcoin. How does that model actually work?
Most of that interest. So again, we give 80% of what we charge back to the community in kind, meaning in Bitcoin, in Ethereum. We've distributed more Bitcoin than all of our competitors put together. We've distributed more Ether to our community than all of our the competitors put together. Why? Because they just don't give anything back.
Okay.
So we published just last week. We published that we gave $11 million to the community. Why don't you see anyone talk about their numbers? You don't see any of our competitors say, "Oh, yeah, we did 2 million or 3 million or 7 million," because they don't do that, right?
Yeah.
So the issue is are you here to create another monopoly or to create another toll collector, just like the banks or just like the financial institution, or are you here to enable decentralization? So each person, each one of us, each person watching this video has to decide every day. When you use your credit card or when you use your bank, you're enabling centralization. You're enabling this monarchy where the guy at the top is sucking 90% of the value to themselves. Or do you want to build a new environment where when you do a transaction, 80% or more goes to the rest of the people who are just like you? Believe me, we don't have any billionaires in as members of Celsius. They hate our guts. Right? Most of our community is people like you and me who are like, wow, finally I get from under the wrath of these banks. So who is the largest shareholders of Wells Fargo? Do you know? Largest single shareholder, or Bank of America, or Goldman Sachs, Warren Buffett, our hero, Warren Buffett. No, but let me complete the circle because most people don't know the facts. Okay, so last year, the top 4 banks, all these people that I say bad things about them every day, the top 4 banks charged the poorest Americans, the poorest 100 million Americans, $34 billion just in overdraft fees, just one fee, $34 billion, meaning you wrote a check, you were $1 short, they charge you $30 or $50 penalty. So who gets that money? When the bank takes the last $30 you don't have, and now you have to run across the street and get a day loan, right? Who gets that money? Most people don't understand. The bank does not keep that money. The bank issues dividend or stock buybacks, which is putting money in Warren Buffett's pocket, right? He's the largest recipient of dividends from Bank of America, from Wells Fargo. That's just a fact. I mean, you can go and look it up, right? So where is that profit coming from? It's coming from like a vacuum cleaner sucking money out of the poorest people in America. And that should just not be legal.
Yeah.
You understand? And that's just one fee. Let's go through the other 20 fees. You understand? So the system is designed to keep you poor. Now, just to finish the thought, right? So we are saying, and in February, we're announcing, you were the first one to hear it, so you have a scoop, that Celsius is not profitable. So we said, we're going to do all the same shenanigans Wall Street does, but we're going to take 80% of that and give it to the depositor instead of the shareholder. You know who the largest shareholder of Celsius is? I am. I own over 80% of the company. And I said, I'm not going to give myself anything, almost anything. I'm going to take all that profit and I'm going to give it all to the community. Pro rata. So I'm going to do the opposite of what banks do. I'm going to take everything we can make. We're going to try to make as much money as possible, just like everybody else. We're not a nonprofit like Ethereum or like all these other projects. We're a for-profit project. But the profit goes to the community, not to the shareholder. And because of that flip, people said, well, that's not going to work. That's not capitalism. Yes, it's fucking capitalism. and it's not just capitalism. It's capitalism where you can be profitable and you can make tremendous amount of value. Why? I'm also the largest holder of CEL token, right? So when I give all that distribution, I also benefit as a CEL token holder. CEL token pays 5% annual interest. CEL token increases in value and so on and so on. Everybody wins. So what we proved here is that the business model that everybody thought was the only way to create stuff, which was the pyramid that sucked all the money from the bottom, is not the best way to do it. And again, I'm a student of socialism, of communism. So because of that, again, it might be very clear to me, but it's not clear to almost any other company in the United States of America.
Yeah, one of my favorite parts about these podcasts is hearing the ethos behind what the founders have been through and their beliefs and how that kind of works its way into their companies. And you are obviously a great example of this. The past 5 minutes have been absolutely phenomenal in hearing about your beliefs and how they kind of go into Celsius.
We're calling on the rest of the community, and especially the DeFi community. I'm calling on them to copy our model. I'm calling on everybody to say, don't do the nonprofit. Don't do all of these experiments that don't really yield anything for the community. Here is a model. We created a model. We proved that it scales. We proved that it acts in the best interest of the community. We proved that it grows extremely fast. Please copy our model, please. So we can all create a giant new system that replaces centralization, replaces the ill capitalist system we have today. Replaces it with a new capitalist system that acts in our best interest, not in the best interest of the top 5 people in the world.
So playing along that statement there, a lot of people don't understand the system and the you called it piping of how interest rates work. I think we did have a community question of how these interest rates are generated and then what factors dictate the interest rates themselves. So if you could break down that for maybe an uninitiated user, and then how do you compete with like a competitor that comes in and for a short time offers a better interest rate, and that user that might be using Celsius moves over for a short amount of time?
Sure. And it's a very important question because you're right. If anyone cannot explain it to you, should not give them a dime, because then it is a Ponzi scheme. Then it is something. So we try to be fully transparent. It's not just that we are transparent. If you open the Celsius app, you can see exactly how many users we have, how many loans we've done, how much interest we paid, who got it. You can dig all the way down on every transaction and basically see if we're doing what we're saying or not, right? But that does not answer the question you just asked, which is how we make the money, right? So, and we're going to make that transparent as well. We're just working on all the mechanisms to enable that transparency. So let's start with Wall Street, right? Because like I said, we copied a lot of the best things Wall Street does. So I'm a rich guy. I have millions of dollars, and I gave millions of dollars to BlackRock, and Blackstone. So why did I give it to Blackstone? Because every year Blackstone magically delivers 17, 18, sometimes even 20% on my money. It's a shiny day, it's a rainy day, it's a Corona day, it doesn't matter. They deliver 18 to 20%. So how do they do that, right? They basically take my capital, they lend it out, or they invested. What does it mean invest? They lend it out. They either got securities for it, or they got notes, and they either get the dividends or they get interest income. And they make 30% and they give me 20% back. So this 80-20 thing that Celsius came up with is not a new model. It's not something we invented. I copied that from Wall Street. When I, as a rich guy, give money to Blackstone, They keep 20%, I keep 80%. That's just how the world works for the very rich. When you're a poor guy, JP Morgan takes 90% of your money and keeps it to themselves. They don't keep 20%, they keep 90%. So just like Blackstone makes money by lending, Celsius makes money by lending. Now, we don't have a bank license. We don't have all of these complicated licenses that some of these guys do. So we cannot lend in the same way that they do. So we lend cryptocurrencies and we do dollar loans. These are the two legal things that we can do all over the world, right? So if you are a crypto hedge fund, or if you are an exchange in the crypto world, you need to borrow assets so you can make your systems work and everything else. You can either risk your own capital, you can take your dollars, buy Bitcoin and enable it to be traded on your exchanges or as a hedge fund, or you can borrow these assets. Usually most what's called dollar denominated hedge funds, and there's about 800 of them just around the world. What does it mean dollar denominated? Their investors gave them dollars, and the investors want return in dollars, right? So they don't want to take the directional risk of Bitcoin. So what they do is they come to us and they say, look, we have dollars, you have Bitcoin because your customers gave you Bitcoin. Let's switch. We will give you dollars, you give us the Bitcoin. We want to do market making, we want to do shorting, we want to do hedging, we want to do arbitrage because the price of Bitcoin is on different exchanges, but we don't want to take the directional risk. So we're going to borrow the coins, we're going to do arbitrage between Bitfinex and Coinbase. There's 1/4% or 1/2%. All we have to do is buy it here and sell it there. And we locked in 1/2% every time we do it. And we'll pay you 5-6% per year. They make that in a month, they make what they pay us in a year. But that's fine, right? Our job is just to charge as much as we can. And if we charge 5%, we return 4% to the community. What does it mean, 4%? We publish a rate every week, every Monday, we publish a rate. We say this week, the interest rate for Bitcoin is 4.2%. That means we are getting 5.3 or 5.4, and we're keeping 20% to pay our bills. It's that simple. When somebody takes a dollar loan, we use the dollars that we just borrowed or we were given by the community, by the hedge funds, to lend to our users. They pay us interest in dollars, but our customers don't want dollars. Our customers want Bitcoin on their Bitcoin. So we have to go to market and buy Bitcoin. So we are always buying Bitcoin, unlike most of the service provider in our industry who are net sellers of Bitcoin. Celsius is always buying every day, buying Bitcoin in the market. And then we distribute that Bitcoin. So every Monday, every week, you get interest in your account. You open your app or you wake up in the morning and you see, hey, we took the worst day of the week and made it the best day of the week. Because you get paid interest first thing Monday morning. And you look at your account and you go, wow, look, I got Bitcoin in my account. I had 1 Bitcoin, now I have 1.04 Bitcoin. I earned 4% over a year. So that's all we do. It's not complicated. Now, anyone can do that. You could do that, right? But we have over 200 institutions. You have to onboard them. You have to do KYC. You have to do AML. You have to do risk management to make sure that they actually return those coins. You have to charge them the fees that they owe you. You have to do collections. You have to pay taxes. You have to, right? That's why we have 65 people that are acting on behalf of our 77,000 users to do that function. And we keep 20% of the profit. I think it's a more than fair deal. It's such a good deal that's the best deal the billionaires in the world managed to get out of Blackstone. So
yeah, absolutely. I was gonna ask you really quick, the interest rates that derive from lenders, or do you have any control over the interest rates, or are they dictated by the market of the supply and demand, basically?
So first, we publish these rates on CMC. If you go to CMC, CoinMarketCap, and you click on the top menu, you will see there's a new section called interest, and Celsius is listed in every category there. And we publish the rate that is the wholesale rate, the real rate, right? Mm-hmm. I can assure you, I'm willing. I'm not even worried for a second that the Nexo or BlockFi will sue me, because I can assure you that none of those guys, the rates that are published, have anything to do with what they earn. They all lose money on this business. right? And like I said, Celsius made money in February, made money a few months before as well. But now we're going to be profitable. We have enough assets, we have enough deployment where we are profitable every month. So the rates you see represent not just the market price, but also us getting to profitability, right? And there are months where we pay 86% or even 92% of what we make. We're not always paying 80. Sometimes we pay more. Again, I'm a large CEL token holder. I'm like, hey, can you distribute even more? So as a shareholder, maybe I'm not getting as much. But as a user of Celsius, I have over $10 million deposited with Celsius. As a user of Celsius, I love what Celsius does for me. And every person who uses Celsius loves it too. So I designed this product for myself as a user, as somebody who said, okay, what is missing in this market? What can I do for me that will also work well for 100 million new people that want to join this community?
Yeah, no, that's awesome. And CEL token it's an amazing structure there that you have. You know, people obviously can choose to earn CEL token instead of, let's say, Bitcoin if they're in Bitcoin, and you get a better rate. Is there any restrictions as far as the regulatory side goes? You know, in the states, and certain states can't participate, or all of them can participate. I believe something happened with the New York or
first. CEL token is very similar to BNB, right? So if you are familiar with BNB and you believe that Binance is a great business, the value of BNB will increase the more trading Binance does. Just ask yourself, what is a bigger business? The NASDAQ or the Wall Street business? So Celsius represents Wall Street. BNB represents NASDAQ. And imagine how everybody's excited about BNB, and we're saying to people, hey, you missed 90% of the story. Right? So CEL token represents us distributing the earnings of what we make to everyone who's participant. But instead of to the shareholders, we're giving it to the user, right? Which is a crazy thing. People on Wall Street tell me, Alex, you're crazy. Why would you do that? You know, why would you give so much to your deposit? You're ruining the party, you know? But look, I want to emphasize it because it's very important, right? So let's look at WhatsApp, the most successful company in voice over IP, right? And then we'll go into money over IP. So the most successful company in voice over IP after 25 years, VoIP existed since 94. So after 25 years, how much in revenues does WhatsApp have?
Quite a bit, I would say.
Zero.
Really?
Zero.
What?
WhatsApp has not had any revenues in 10 years. Zero in the revenues. They don't charge you anything, right? So when they got sold to Facebook for $22 billion, they had zero in revenues. They had 30 employees and zero in revenues. And they've never had any revenue. So how much did they give back to their 1.5 billion people, their community? How much did they give them? 100%, right? If they kept nothing, that means they gave their people, their users, 100% of the value. So it's not that Celsius is crazy. Some of the most successful companies, Amazon, gave its users almost 100% for 25 years also, because they did not generate a profit until the last 2 or 3 years. So
Facebook did something similar too. I think they started out without advertising as well.
Right. So Google, everybody started that way, right? But then they switched and they became the nemesis, right? Remember Google said, we do no evil. They don't say that anymore, right? I mean, so that's why it's very important for us that we build an institution that does not convert from the old Google to the new Google, right? Mm-hmm. Or from the old WhatsApp to the new WhatsApp. Now, Facebook is trying to put a lot of ads in WhatsApp so they could make money out of it, right? But what we're trying to, my main point is to say that you can give 100% of the value and still create tremendous amount of value on the equity side. So again, I'm the largest shareholder of Celsius.
The asset. Yeah.
I'm not stupid. I know that even if I gave 80% to the community, the value of the equity that I have will increase much more than if I gave myself 80% of the value, because I'm going to build a much larger community. So it's a win-win-win for everybody involved, right? So, and that is, again, my call to the crypto community is to copy the model. I didn't file a patent. I didn't keep it a secret. I'm not talking about it. I'm screaming out the top of my lungs saying, if we want to be successful, we, the crypto community, we need to do more of this and less of that. Because we've proven that in 11 years, copying Wall Street, all we've gotten is basically just a very few profitable companies in a very small community.
Absolutely. No, that's awesome. I wanted to cover a little bit about the things that are going on with the coronavirus. You are in New York. There's some cases that
sorry,
happened.
just before we jump into Corona, I did not answer. I went long way and did not answer anything about the CEL token. So I wasn't avoiding. Let me answer that. So the CEL token, we have basically US and non-US. About 40% of our users are US, 60% of our users are non-US. Anyone who's non-US can tell us for each coin. They can say, for Bitcoin, I want Bitcoin, but for Ethereum, I want CEL token. And they can earn, instead of just earning 100% of the value, whatever, let's say 5%, they can earn another 30%. So they can earn 6.5% instead of 5% in EOS or in Dash or in whatever, but they earn it in CEL token. We just deposit CEL token into the wallet, right? And about 60% of our users who are non-US choose to earn in CEL. And they have an 81% HODL ratio, right? HODL ratio. What does it mean? 81% of these 60% that get CEL tokens every week don't sell them. They don't go to Switcheo or IDEX or Liquid and sell the token. They keep them in the wallet and they earn 5% interest on it, right? So they believe in the CEL token, they believe in the community, they believe in the project, and it works exceptionally well. CEL token is up over 300% in the last year. So instead of earning 5% interest, and with the bonus 6.5, they really earned 3 times that, 18% interest on their Dash or on their EOS or on their Bitcoin in CEL token, right? So the model is working very well because there's a limited supply of CEL token, right? So if there's more users who deposit more assets and the assets earn more interest and we pay more out and more of those people use CEL token, the demand for CEL will increase. The supply is limited. We know what happened. For US users, we are not yet determined, are we a security or we're not a security? And the SEC, as you know, is going through its own discussion internally of figuring out what is a security, what is not a security. During that period, we said to our US users, you can earn interest, you can earn CEL on CEL, meaning if you buy CEL and deposit it, you will earn the interest, but you cannot be paid CEL on Bitcoin or on Ethereum. You can still earn Bitcoin on Bitcoin in the US. You just cannot earn it in CEL until we hear from the SEC what are the rules. Is it the Howey test, or is it the modified Howey, or is it a completely new regime of what? And for example, they said we're gonna maybe have a 3-year moratorium, right? Which I love. I'm a huge supporter of that plan. So because of that, US users are treated a little bit differently. It has nothing to do with New York or New York State or anything like that. It's a US in general. So 40% of our users choose to earn in kind. They get Bitcoin on their Bitcoin, and some of them also earn CEL on CEL.
Got it. Well, we want to talk coronavirus, but before we get there, I think Finch, one of the other co-hosts of Layer 1, would kill us if we didn't ask the question that he had here. He said, what products is Celsius looking at in the future? Have you explored structured products? And if so, when do you see this addition coming to fruition? So basically, the question would be, we know the products you have now, you've done a great job explaining it. What are you going to do in the near future as far as rolling out different features or products?
So great question, and I think a very important question. So when you look at the existing infrastructure, every day a new company pops up and says, prop trading, futures, options, derivatives, you name it, right? We don't want to do any of those things. First, we are in the safest business on Wall Street. So if you go to any Wall Street guy and you say, out of all the businesses on Wall Street, what is the one thing that always had money that never caused any disaster, any collapse? They will tell you SEC lending. What is SEC lending? Securities lending. That's what Celsius does. It just, instead of securities, we do coins. So we are on the spectrum of Wall Street. We are on the safest side. Interest income, SEC lending, loans backed by 200% collateral. asset-backed lending backed by 200% collateral. So go to your bank that is leveraged 10 to 1. Read, for every dollar in loans, they have only 10 cents in assets. You understand? We are the opposite of that. We have $2 in assets for every dollar in loan. So people have to understand when they say, oh, it must be, Celsius must be a very risky business. It's not a risky business. It's actually a very, very safe business. It's just that the people you give your money to today convinced you that they have FDIC insurance and all kind of other stuff, and they're safe. They're not safe at all. We had to bail them out every 10, 20 years. We, the people, had to bail them out, and they got the record bonuses right after we bailed them out. So again, because of lack of education, because of lack of transparency, people do not know the facts. And I'm happy for anyone who's watching this to show me what am I saying that is not true or partially true, or that I'm saying that they can rebut or convince me that either the banks or Wall Street are acting in your best interest. So that's kind of like the context. We do not plan to do anything on the risky spectrum. We plan to come up with more magical products like 8% interest income on your dollars, like loans at 5%. Now, if you use CEL token, you can get a loan at 3.5%, cheaper than you can get it from Wells Fargo, right? And now you can buy coins inside our wallet. You can buy Bitcoin, you can buy Ethereum, and so on and so on. And we have some of the lowest fees, soon to be no fee. We're gonna give you any token you want, not gonna charge you any fee whatsoever. And on top of that, we announced we're gonna do gold. So we're gonna take the same thing we created for crypto and offer it for gold products. So we think gold is a great store of value. Gold is an exceptional way to diversify. And we think that your portfolio should have just as much gold, if not more, as crypto. So we think that it's the same user base. And we're going to be adding a lot of gold products and gold services that make it really easy to peg yourself to gold instead of dollars or Bitcoin or anything else, right? So we think we're on the safest side of the spectrum. We're never going to do stuff that is risky or high risk or crazy, or because again, those guys that want that money, that when they take the risk and they win, great, you make a little bit of money. But when they lose, you blow up too, right? And our entire mission is the opposite of that. So if we blow up for any of our customers, what did we do, right? We proved that we're just like Wall Street.
Yeah, yeah, definitely. You know, with all these products with derivatives and futures and things that we have out for crypto right now, it definitely exposes a lot of risk in terms of if there's a black swan event, you know, does that establishment actually have enough liquidity and so on to pay out on positions for traders? And you know, I can see a pretty big event happening if there's, you know, significant black swan event where those establishments
that already happened with DeFi, right? I mean, when you see ETH go from 280 to 200 in a matter of a day or two, that is all liquidation, right? That is huge liquidations across the board for all these guys that were on margin and sitting in the smart contract thinking that nothing's going to happen. So again, it's not a good thing, right? It's too much in a tiny community like ours, right? And people think that DeFi is going to save us. No, DeFi is like a nuclear weapon, you know?
So it has to be used responsibly.
Yes,
you know?
it should be never used. Let's put it that way. Okay?
Yeah. All right. So let's get into this, you know, coronavirus, right? So we have obviously slowdown in you know, global growth because of certain things that are happening, right, with the virus. You know, it's impacting, like, you know, the GDP of China, and everybody's expecting, you know, everybody's seeing this risk-off environment in the market, right? And everybody's expecting, you know, crypto or Bitcoin specifically to kind of be that store of value, a hedge to certain events like we have right now with the virus. But we're not quite seeing that. We're seeing, you know, some drop off in crypto, some drop off in BTC because of these, you know, concerns with coronavirus and how it's going to impact the growth. We have, you know, central banks coming out with more stimulus, which again should, you know, benefit Bitcoin. But we're not seeing that immediate reaction at the moment. You know, what are your thoughts about that?
So I'll give you the long answer. Okay, so the first, nature is completely unpredictable, and viruses have existed on this planet longer than almost any other animal or any other species. right? Most viruses are at least 4 billion years old. So we humans who've been on this planet the way we are, maybe 100,000 years, and think that we're in charge. We're not in charge at all, okay? And so yes, there is a situation where a novel virus like the corona virus can wipe out big chunks of the population. And I'm very worried. I'm not just saying, oh, you know, it's just another flu or just another whatever. This virus never existed. Our bodies are not capable of treating it or handling it. Yes, only 2 or 3% death ratio, but you have to remember this virus can combine with other viruses. If you have the flu and you have another virus, the two can change RNA or combine RNA, and they create yet another new virus that we don't know that can kill 100 million people. So we don't know what's going to happen with unintended consequences. So in that risk-off environment, and look, the stock market is almost at an all-time high still. And you would think that people would go to safety, and because of that, as a non-correlated asset, Bitcoin will go up. But that's not happening. And when you see the stock market going up or down, Bitcoin is up on the days the S&P or the Qs are up, and it's down on the days the market is down. And the reason is that the same people that are trading the VIX and trading options and futures on the market are also trading Bitcoin and Ethereum in the crypto markets. And so because we have too many speculators and not enough hodlers, the hodlers are just sitting on the sideline. So the people that are moving the markets are the people that are behaving just like the stock market. And because our community is not growing fast enough, we're not adding enough hodlers. We're not adding enough people who are looking for safety or looking for diversification. The market as a whole does not behave the way it's supposed to behave. So we went to 4 phases of adoption, and during each phase, the market corrected by 80% or more, right? So anarchist back in 2008, 2009, then it was libertarian, right? 2012, 2013. We didn't have enough of any of those guys. And when they hand off the baton between the anarchist and libertarian, the price goes down 80% because too many anarchists leave, there's not enough libertarians, poof, the price drops. Not enough libertarians, not enough speculators, right? The prices drop 80%. Now it was supposed to be a handoff between the speculators and the institutions. Not enough new institutions came in, too many speculators, poof, the price corrected down to 3,500. So the next wave is supposed to be what? More people like me and you that are supposed to bail out the entire crypto community, right? And that's where we're struggling. That's where we're failing, because we did not deliver the utility. All we delivered is more volatility. And volatility is great for traders. But the people who want interest income, or the people, they want utility. They want something that they can use that solves their everyday problem. And again, to do that, you have to have one leg in the centralized world and one leg in the decentralized world.
Yeah, absolutely. I would defend the speculators. I would say, speculators do provide a right feature, in terms of liquidity, providing.
So
liquidity
do viruses,
Right. Yeah.
There are some benefits.
There's a dark side to that one. Yeah.
No, I'm kidding. Look, we are a community of hodlers, right? So we are not. There are 100 communities for speculators. Binance, BitMEX. Those are communities for speculators, right? We are not. We are the opposite of that. And before Celsius, there was no hodlers community. So I'm just making a joke. There is a need for every type. We want more speculators, but we don't want only speculators, right?
Yep, absolutely.
For every speculator, we want 5 hodlers, and we're not getting that.
Yeah, it's amazing to see the narrative shift so quickly, because you have this situation with Iran and the U.S. and it's like, people in Iran will, these third world countries, they're moving to store value, they're moving into Bitcoin. Bitcoin's risk off, and now with this coronavirus and seeing that Bitcoin's uncorrelated, it's like, okay, so it's risk on now. It's just where do we go in the future with Bitcoin in general? And I do want to hear more about coronavirus, because what you were saying there was awesome. But where does Bitcoin go in the future? How do we get there? We just add more hodlers? That's essentially the answer?
Yeah, so I said it several times that I do predict Bitcoin topping 30,000 by the end of this year. And a lot of it has to do with the halving, but first it will go down. Meaning, because when you start seeing risk off every speculator sells everything they have. And that means also selling Bitcoin and also selling Ethereum. And then hopefully the weak hands are replaced with cold hands, which are the hodlers who are taking over and they don't sell, right? I mean, we watch our community. They don't sell coins. I rarely see anyone. I just see them buying a little bit more. Poop, it comes in, it earns interest, they love it, and so on, so on. The lower the price, the more they buy. So we have not had that transition yet. I am expecting Bitcoin to go lower before it goes higher, right? And it will go on some events. Something really bad is going to happen. It's going to be a huge risk off. For example, the United States announced, oh, shoot, we started doing testing, and instead of 100 cases, we have 100,000 cases.
Yeah.
If you just test, guess what? You discover things. You know?
Alex, when are you leaving New York City based on that? What you just said, you get up to the mountains.
So look, I'm here at the Rise building. This is the on 23rd Street, and half of the companies stopped showing up. So it's already happening, unfortunately. So the economy is going to slow down. We already rang out all the financial engineering out of the U.S. economy. The last few years, not few quarters, the last few years are all fake GDP produced by just the Fed and the government pumping more and more and more printed fake money into the economy, right? So we are in fume, right? So anything that disrupts that, and this is a disruption both to supply and demand. We never had that before, because usually it's a financial thing, and something freezes, but the rest of the economy chugs along. Here, all of the crypto events are canceled. South by is canceled. I mean, so when you see things like this happen, and the whole company say no more travel, giant companies like Microsoft and others, that is real. That is substantial. So I'm very worried about the economy. I'm very worried about the stock market. I'm very worried about this being Armageddon, not just being whatever. And when these things happen and people sit for a second and say, okay, well, I can't have dollars. So what do I go into? I'm not going to buy real estate. I'm not going to buy foreign currency. I'm not going to buy commodities. Okay, I'm going to go into gold, and maybe if I'm a true believer, I'll buy some Bitcoin.
Gotcha. Okay. Well, hey, this has been a phenomenal interview. We're about an hour and 20 minutes in, so we've definitely discussed a lot, and I think we could honestly speak on a lot more. But just a couple questions before we leave off here. I did have, we do have like a ton of people on the podcast, and we like they'll live in different areas or have different backgrounds. So we'll say something like, "Hey, you're over in China. What's the crypto? What does living in China kind of breathe into your ideas and things like that?" But so I'm super interested in at what age did you leave the USSR, and how does that play into your mindset? Is it just that all of us can benefit, like you were saying earlier? Or I'm super interested to hear like your background in that USSR environment, because no one really that I know has ever been in that situation.
Right. So look, communism. So China is not really communism. China is a capitalist country. They just have a communist political system. Communism is everyone makes the same amount of money. Just imagine that everyone makes $50,000 a year. Okay, everybody. Doesn't matter if you're a rock star, or YouTuber, or if you are the head of JP Morgan, you still make $50,000, right? So that's the main idea behind communism, right? And everybody works as hard as they can for the benefit of the society. So that system obviously didn't work. I left. My parents left when I was 7 years old, but there were lines for everything. I remember standing in one line while my mom's standing in another line, and I was waiting for the potatoes, and she was waiting for the bread. And if we didn't have enough people in line, we didn't have dinner. Even if we had money, you just had to stand in line because there was too much. There was always more demand than supply, right? So this concept that you can just walk into any supermarket and buy anything you want did not exist in most communist countries, like even in China back in the days, or in the 70s, or Cuba, or anything like that. So that scarcity, the idea that you could get there, right, if you have the wrong economic system, or if you have the wrong incentives, has really left a lot of lifelong experiences in my head, which most people in the US have never had. Most people in the US never had like my son, my 7-year-old son, he ordered stuff on Amazon, and 3 giant boxes showed up with these space trucks. And I didn't know, like I was like saying, Jordan, why would you order 3 of exactly the same $600 truck? It's enough you did 1. Why would you do 3? And he said, I knew, Dad, that you would cancel at least 2 of them, so I ordered 3 to make sure that at least 1 of them arrived. Right? So, and this is the kind of thinking that most Americans have. They're like, okay, what's the big deal? I'll order the same shit from 3 places, and I'll ship 2 of them back, and everything's going to be fine. So that's not how the world operates, right? And we in such a rich society with so much excess, because we're borrowing from the future, because we reach out and print $1 trillion deficit, and we think that that's just normal. That is not normal. That is like a tiny little window of time in the history of time that we managed to get away with that. So when markets normalize and money becomes actually valuable, not the way it is right now, like Ray Dalio said, cash is trash. Things are going to look much more like Russia than they're going to look like the United States looks like today. And all I'm saying is that obviously I don't want any of this stuff to happen, but you cannot steal from the future, from your children and grandchildren, and think that there are going to be no consequences.
I guess the idea is, well, at least what I believe is that if you borrow from the future time and you come up with a solution to fix the issues that we deal right now in financial industry, just with, how flawed it is, then, that essentially works out, because you buy in time to find a solution, and then solution is found. Maybe it's crypto, and we're making that way,
So the United States, look, the United States has only been around for 250 years, right? It's not, the Roman Empire survived for 1600 years. And after the Roman Empire, there were 7 other empires before the United States of America. If you're a student of history, go and study what happened to every one of them. I have a YouTube, Celsius Network has a YouTube channel in which I just did an hour-long discussion exactly about all these issues. So it's AMA number 4. Go look at it. I show you the Roman Empire, the Portuguese Empire, the Spanish Empire, right? The Dutch Empire, the British Empire, and so on. And all of them collapsed on themselves because they could not resolve exactly what you've said. So just because we did something great and we became the richest empire that ever existed doesn't mean that we last forever. This experiment that the United States is doing today has never been done before by anybody. And the only solution for trillions and trillions, there is about $120 trillion worth of unfunded liabilities for the United States, 23 trillion in debt.
It's crazy, yeah.
And then another 100 and something in unfunded future liabilities. So you can't work yourself out of that. Okay, you have to devalue your currency. When you devalue your currency, all the value escapes from your empire to the next empire, and it's not going to be the United States of America. So
who's it going to be?
Well, again, if we have Armageddon, then there's a global reset and everybody devalues, and then nothing happens, because if everybody devalues at the same time, then status quo. But if China or somebody else, for example, moves to blockchain-based limited supply, right? They do the opposite. They basically peg to the gold, or peg to actual production, or they peg to profit, which we're not doing. Then people slowly will say, okay, well, I'm not going to buy all these deficits. I'm going to go to a system that has finite supply, like Bitcoin. So Bitcoin has a good chance as the independent system, but it's competing with these other systems that have basically new thoughts, new ideas on what does the reserve currency of the world look like.
Amazing, man. I honestly feel like we could have this discussion for another hour. So I'm gonna have to cut it. Yeah, we can. Yeah, I really wish.
Chapter 2 tomorrow. We continue.
True. So the last question we have before you kind of give information on Celsius and where they can, where our followers can, find more about you and find more about Celsius is book recommendations. So based on the knowledge of history and all that stuff, I would love to get a history book recommendation. But any recommendation you have, non-crypto, non-history, doesn't matter. What would you kind of say to the people listening out there?
So a video recommendation and a book recommendation. So the video recommendation is Ray Dalio has a great video on YouTube that explains how the economic cycles work, the short-term cycle, the long-term cycle. It's only, I think, a 20-minute video. So go ahead, look at that. And again, Ray Dalio with Principles, I think one of the best books out there as far as simplifying it as to how do you create principles for your life? How do you create a path? How do you become the best person you can be, right? Because each one of us has a unique skill set. We're the best in the world at something, but we don't get to discover that. And when we see a star or somebody who's doing exceptionally well, and we think they're 10 times smarter than us or better than us, no, they just discovered the one thing they're really good at. So Principles really helps you with that, which I've never seen a book like that, right? I kind of, again, for me, I was lucky. I found the one or two things I do better than most people, and I just did that again and again and again. But Ray does a great job of walking you through kind of exploring your inner self and becoming the best you can be.
Awesome, man. Well, so Celsius and Alex Mashinsky, where can they find you?
So I have my email is alex@mashinsky.com. My last name, Mashinsky. Celsius Network on Telegram, Celsius.network on the web, or download it as an app and try it out. You don't have to deposit anything. You can just see how it works. And what else am I missing? And YouTube, yeah. Just go watch some of our videos. We have all of our team members there kind of talking about the different parts of the business. And again, we're building this for the community, you know.
Awesome. Alex Mashinsky, thank you so much for coming on to Layer One podcast. It's been an absolute pleasure. We've discussed many things, so I'm sure, we're going to see each other again and talk more as you guys progress with your plans at Celsius.
Yes, and thank you guys for doing what you do, because I think one of the most important pieces of growing the community is educating people, making them get comfortable with how things work and who is a good actor, who's a bad actor, and so on. So I really appreciate you guys spending time and producing the content.
Absolutely.
Yeah, we enjoy the job, Alex. Thanks.
Yes. You shouldn't be paid for it, right?
Hey guys, we hope you enjoyed today's episode. Make sure to check out Layer One on all the audio and video platforms listed in the description. Thanks for stopping by, and we'll see you next week.